Welcome to Squawk Alley for a Tuesday. John Ford, Kayla Tausche, and me at Post 9, along with Cheryl Cheng with Blue Run Ventures and Roger McNamee, Elevation Partners. Guys, good morning to all of you. A lot to get to on the worst day for the NASDAQ in nearly a month. We're going to start with Samsung today, the company permanently discontinuing the Galaxy Note 7 phone amid all those reports of battery fires. This is Samsung's worst ever recall and could cost the company as much as $17 billion. Not coincidentally, Apple shares rallying, relatively speaking, currently the top gainer on the Dow. John, we sort of set this up in the last hour, but now we're starting to try to put this in context of giant recalls and corporate crises in history.
It's really difficult to gauge because the smartphone is kind of this unprecedented consumer product in the millions of units, highly profitable, and only a couple of companies in the industry have been able to consistently make profits at it, Apple and Samsung. And now you've got Samsung stumbling at the premium tier. There's brand equity there that could potentially be lost. You've got Google trying to push in. You've got Chinese competitors down at the lower end trying to push up. And it's Q4, which means if you've got a premium phone in that tier, you can sell it. If you don't, you just can't sell it. So how many people shift to a lower profit Samsung phone? How many people abandon Android? How many people just switch to another Android provider? See.
Roger, the FT is comparing this to J&J and Tylenol from back in the 80s, although that situation only took about 3 months to rectify, to actually get that tamper-resistant seal on the medicine bottles. If you had to guess how long it's going to take Samsung to come up with a new product that doesn't have these problems, how long do you think it would take?
I think it's a great question, Kayla. I think the problem for Samsung is that unlike Johnson & Johnson in the Tylenol case, they resisted doing the right thing. They initially tried to downplay the problems. And I think that has made this consumer problem much worse. The second big difference here is that smartphones have just reached maturity. We've just passed the peak on sales growth. And so you're in a category in which consumer behavior is pretty deeply set and where people are not upgrading at anything like the rate that they did before. And market share once lost is going to be a lot harder to get back in this environment than it would have been just a few years ago. I think this is, I would not underestimate how bad this is for Samsung in the smartphone category. If you're a customer, I think you're sitting there saying to yourself, okay, gosh, do I get the one with the beautiful camera or do I get the one that explodes? And I think the one that explodes is going to be the less popular item at Christmas this year.
Cheryl, it's easy for competitors who want part of Samsung's market share to look at this with a little bit of schadenfreude, but do you think this could happen to anybody?
I think it absolutely could happen to anybody. I think what people forget is that smartphones actually just came onto the market around 2008. So in a very short amount of time, we have gone from using laptop and PC computers to essentially having a computer in your pocket. And so that pace of innovation has been very, very fast, faster than, any other computing platform. And so as a result, it's a very complex product, and anybody who's building such a complex product could have multiple points of failure.
Well, if that's the case, Roger, how much do we start to worry about potential problems in other companies' supply chains?
Well, to be clear, I mean, these phones, particularly the large form factor like the Note, are essentially a battery with a little bit of a display and some other electronics wrapped around it. And lithium-ion is a notoriously volatile material and therefore subject to this kind of fire and explosion risk. Every smartphone is basically a lithium-ion battery. Every Tesla car, every electric car is subject to this exact same issue. People have known about the issue from the beginning. There are ways you can handle it. Obviously, there are tens of millions of these smartphones out there, and most of them do not blow up. But if you cut corners, and I think it's clear Samsung did cut corners, the risk of a problem goes way up. And when you get a market that's mature, where sales are harder to come by, the temptations to cut corners increase. So I do think the risk is rising that you'll see things like this from other people because of corner cutting. But at the same time, people have a lot of experience working with this material. So there's really no excuse for it if you're doing a good job running your company. This is a bad sign for Samsung. all the way
Cheryl,
around.
where's the investment opportunity here? I can imagine perhaps Qualcomm, seeing as the Note 7 wasn't carrying the application processor from Samsung, if people from Qualcomm, if people switch to other Android phones, they might end up using a premium phone that has a Qualcomm chip. But are there other areas where you think companies providing technology stand to benefit if people shift away from Samsung's Note 7?
Well, I think the immediate shift is just from one smartphone provider to another. And so you see, as you mentioned, folks like Google who are now getting into the hardware game more seriously. Beyond that, though, there is a brand and platform issue that Samsung definitely needs to address. And they have many products outside the smartphone line that they also need to protect as part of being part of the connected home, other things around Internet of Things. So there's a much bigger battlefield here. The smartphone is just the beginning of that, because that is the device that almost all consumers carry around with them and is the first point of entry for people moving into this category.
All right, we're going to move on to Twitter, guys. Our David Faber reporting the company's still in talks with Salesforce, and that comes a day after Twitter fell about 12% as buyers appeared to be losing interest. Bloomberg got a copy of a message from Jack Dorsey to employees where he says, quote, "Life is short, every day matters." Roger, we're here again, tossing this one around, trying to see what the company's future is with very little visibility. What do you think right now?
Well, I think the problem is very simple, that the public market has always viewed Twitter as a rival to companies like Facebook, which is to say that they're playing in the same game at the same level. The fundamentals have not delivered the results those investors had expected, yet the stock has a premium that, for an acquirer, is just way too high relative to the earnings they're likely to get. So the deal would be, I suspect, massively dilutive to essentially all of the people who've looked at it. And I think the gap on price is so wide that it's unlikely to be bridged. I can imagine a vanity deal being done here. It's very hard for me to see anybody being able to make a great case that Twitter is additive to their earnings. I mean, literally, I can't see anybody for whom that's true. I see people who can build other businesses. Google could leverage it, maybe Facebook could leverage it, but not in an earnings sense. And I think that makes this a super tough deal to do.
Is that true at 17, or is it also true at 9?
I would have said, you know, the way I think of it in terms of just total market cap, I think every price above $5 billion is very hard on the current earnings numbers to make work for other people. And, you know, the market cap of today is, what, 14 or 15, right? So it's way off where I think a deal is easy to do. It doesn't mean they can't get it done. I mean, these deals are sold, not bought. There are a lot of really smart M&A bankers out there. And, you know, with enough wine, I think they can get somebody to buy this thing. But, you know, I will tell you, if I'm a shareholder of the buyer, I'm not excited to be the, quote, winner, unquote, of a transaction.
Well, and that's something that Salesforce is having to wrap its head around, which has been an issue for the investors in Salesforce. And Cheryl, it might make more sense from a product perspective to have this company go into the hands of a content company, but it doesn't sound like any of those companies are around the hoop, even though Jack Dorsey is trying to distill the purpose of the platform as a people's news network. What does Salesforce need the people's news network for?
Well, there's a lot of value still in the data that Twitter provides, right? So I think there's two different components. One, definitely the financial multiple, and, you know, is it going to be dilutive to a buyer? That's definitely a concern, but there is a lot of value in the data in the Twitter stream. So that value is important to a media company. The problem is there is a disparity in multiples, right? A media company is not trading at a technology company multiple, and that definitely is a problem. I think on top of that, if you look at the fact that Twitter hasn't really grown in terms of users or engagement or even revenue for the last 5 quarters, that's also a problem, because consumers go to Twitter for a certain behavior. They haven't been able to expand that behavior beyond using the traditional and the original Twitter purpose. And so when buyers look at it, about where can they take this, and they really just look at the Twitter fire hose and what is that data worth, and that's difficult for different companies to parse out.
Carl, also got to say, never a good sign when the CEO of a troubled company starts writing notes that sound like they belong at the end of a yearbook. What a long, strange trip it's been. It's like, uh-oh, I don't know what's coming next, but it doesn't sound good.
Right. Have a great summer.
Hey, John, really important point there, because the data stream at Twitter has always offered, in my opinion, huge potential value, particularly if a company treated it like Bloomberg, which is to say they made products designed for analyzing the markets, analyzing politics and news based on changes in long-term behavior on Twitter. I think that potential's always been there, but the fact that Dorsey and the prior managements of Twitter have never been able to do anything with that should give huge pause to any buyer.
Roger, Cheryl, thank you guys. Interesting day. Cheryl Cheng and Roger McNamee.